revenue growth is not great, and that's okay. When Citigroup had great revenue growth, where was the stock? Over $500. Now that Citi has modest revenue growth, that's much more sustainable. The stock's in the 60s. So you're getting it done with the 3 C's: cost, credit, and capital return. And that's a formula that works. And that's, you're not going to have great revenue growth, and that's okay.
But what's the broad sentiment difference, Mike, today compared to Friday, when they all traded up on Friday, all down today?
It's simply the expectations got a little too high after Friday, and today you saw that Goldman Sachs revenues fell a little bit short, and so that put a little negative sentiment on the group today. The backlog for Goldman Sachs going into the next quarter is a little bit lower, and so it's a little bit more of a wait and see. Now the IPO backlog should be pretty good. Maybe that's later in the year, but it might just take a little bit longer than some people had thought as of Friday.
So Devin, is JP Morgan just sort of in a league on its own, or are there other implications for the other banks that still haven't reported, like Bank of America?
Well, I think there's always going to be some correlation between the banks, but I think to Mike's point, we did see a little bit of letdown today from Goldman Sachs. Just the market got a little bit ahead of itself on Friday, but I think for Goldman maybe specifically, they really need to resolve the 1MDB issue, and I think that'll be a big deal for the stock. And then they really need to move the narrative to some of the growth initiatives that they have underway here, which we're actually pretty excited about. And so I think that's really it for all these banks. People want to see growth, and they want to see where each firm is differentiating. And so we are excited about Goldman, but they need to be able to take that narrative and talk about the consumer business, talk about wealth management, talk about the cash management businesses. And we didn't maybe get enough about that today, and I think that's also where some of the softness is. But we are excited about where they're going, and so it's just kind of a matter of timing, in our opinion.
Mike, both of the two that reported today, Citi and Goldman Sachs, fairly cheap compared to their historical own performance and the rest of the group. Which is your top pick?
Citigroup is our number 1 pick. Citigroup today, with the first quarter results, had the highest return on tangible equity in over a decade. So in a way, it's like Tiger Woods, the best results in over a decade. Not the as many green jackets, to say the least, but it's the best results in over a decade. The stock's trading a little over tangible book value. But what's underappreciated is that Citigroup reiterated financial targets for next year that implies that consensus should be 15% higher. So not only do they not cut guidance, they reiterated guidance that's above expectations. So tomorrow, I'm going to the annual shareholder meeting.
Because you're a shareholder.
I am a shareholder. Here's my share of stock. We're going old school here with a physical share of stock. Okay.
Which costs you more than buying the share itself.
It actually
to get
did.
It certificated.
To get the certificate cost me more than buying the stock itself. But I'm going to ask the new chairman of Citigroup, do you agree with management of Citi that they should exceed their financial targets for this year and next year? Because the street doesn't think so. And if the chairman thinks so and they don't get those targets, then the pressure only gets greater on CEO Mike Corbat.
Devin, quickly, what's your top pick?
So we really like Morgan Stanley here. I think for a number of reasons, the stock is trading at well under 10 times our forward estimates. So I think you have some pretty good valuation support. But really, I think we're going to start to see the wealth management business grow quite a bit in 2019 and beyond. So that to me is, if you don't think that there's growth here, then maybe sub 10 times is appropriate. But we do think that we're going to see quite a bit of growth on some of the initiatives they have in wealth management. And we also see quite a bit of room for operating margin expansion as well. So Morgan Stanley stands out. I think the bar is sufficiently low heading into results on Wednesday. So we'll see there. But, we really like that stock here. And then I would also say I'm getting a little bit warmer on Goldman Sachs, but I do want to see more detail on some of these kind of longer term growth initiatives.